It's August 13. I am the only Italian working right now, I think, because in Italy we have this ancient holiday called Ferragosto, that is basically the middle of August. And since ancient times, since Roman times, is it's Agosto because it was in fact the month itself is named after August, the emperor, right? And he, I don't remember the reason, but he made this month his month, and in the middle of the month, almost actually everybody almost takes the entire month off, but in particular the middle of August, like it's dead, like it's crazy, like there is nobody working, but I am the only one doing something. It's crazy. But anyway, yeah, so I am in Torino. This, like we mentioned before, it's the headquarters of the Scientific Bitcoin Institute. You can see the nice flag we have in the background. Yeah, some few updates. I'm still working on this dashboard. I'm marveled on how incredible it's looking. We're doing a lot of progress. In the end, there's going to be like almost 75 indicators. Some are based on the power law, some classical one, on-chain indicators. There are a few advanced things, like, for example, I used hidden Markov chains to identify states, both using residuals and also using the slopes, what we call the power law slopes, the daily slopes, and actually even a combination of them. And just recently, because these are Markov chains depend on some random parameters, like, for example, when you train it, right, basically the idea is that you give some information from the past, and then there is a mathematical process that identifies states. If the states are different enough statistically, then it can mark them and say, okay, this state is different from that, right? And the idea is hopefully to try to identify states that represent lows, that represents highs, but also with the slope is not just the distance from the power law, but also the dynamics. Is it a quiet time? Is it a turbulent time? And so when you combine it together, that is what gives us the best results. And so this indicator, I'm very proud of this indicator. By itself, this indicator, I think, could be valuable, hundreds of dollars subscription per month, I think, but we will not have hundreds of dollars subscriptions. Probably we'll have a high level subscription, but and again, these are not subscriptions, are donations that you do to the institute. So this particular indicator is pretty advanced because it actually uses a consensus, because when you train it, your starting point can be random. Is random, and this approach is very sensitive to initial conditions, and so you could get like some trajectory got us because the objective of this indicator is to actually create actionables for the user. So the actions could be rebalance your portfolio, like sell some of your Bitcoin. I know that some people don't want to do that, but if you are willing to maybe rebalance a little bit when the price is in a place where probably there is a correction, you can do that. And it's even telling you how much you should rebalance. And then there are times where maybe you want to have a little bit of leverage. We have many tools available, like futures, for example. And if you get, and this leverage is very small because we don't want to risk things with Bitcoin, but even a 1.5 leverage will allow you to get more Bitcoin in the future. So this indicator tells you the actionable, right, at a particular moment. You don't have to do it instantaneously because these states last several days. But we tested for everything. We tried many financial measures like Sharpie, for example, Sortino, diminishing withdrawdowns, and even multiplying your Bitcoin, because that could be a goal. In particular, now that Bitcoin is not doing what it was doing 10 years ago, right? But Bitcoin has the entire idea is that it's so regular that we can use the power law to extract information and then act on it. So it's beyond just looking at a nice chart. It's actually using the power law in a more actionable way, let's say. And so this indicator uses 60 different initial conditions. So basically, it's like an assemble of um, decision makers, and then they vote with different weights according to how well they perform. So it's a very, very nice, sophisticated indicator. We work with it for with Claude for several days, testing all kind of things, doing walk forward. So basically using only the information from the past and not the entire training set. And we are getting very, very nice results. Like we are reducing both the drawdown that you experience as a Bitcoiner. That is that per se could be amazing, because many people don't like to have a huge drawdowns, and this actually reduces drawdown. But also in the end, you multiply your Bitcoin. Some of the history gave us crazy results, like in 10 years, because we start this from 2014 because we use the first year as a training set, and some of the trajectory gave us like 3,000 Bitcoin, starting from one after 8 years, 10 years or whatever it is. And these are extremes, like extreme results, because of like I say, this tool is very sensitive to initial conditions. But if you use this assemble, you still get very cool results that are more reliable. Like maybe you multiply by 20, but it's still amazing result. You start with one Bitcoin, and through these games of selling a little bit Bitcoin, getting a little bit of leverage when it's appropriate, you multiply your Bitcoin by a factor of 20, and we reduce the drawdown by 20-30%. That is pretty cool result. So hopefully this is going to be like a very powerful tool that people can use. It will be probably just for the highest tiers of support. So if you support the institute, then you will have a tool that you can use as an investor, that is very powerful. But always double check everything, make sure, always verify whatever tool is available. We want to provide the information, the knowledge, and it's up to you to make sure it works. Okay, this is not financial advice. Anyway, so I'm doing a lot of progress with all these. I will show you at the end of the show. I will show you how this dashboard looks like. I will walk you through for a few minutes, but I want to give Stephen the opportunity to talk. By the way, we have an announcement. Next week, we will start another show on Thursday around 3 Central Time in Europe. I think that is early morning in the US. And this show will have 5 of us. So we have Pios Springer, that is probably some people know him. He was in different, mostly in the German world. He's a mathematician and a investment banker that worked for Wall Street for a long time. Holger, that is a businessman. He's also German and a long time Bitcoiner. And Alex, that is a computer scientist, a professor, early Bitcoiner. He's Russian. So we will have a very nice group of people with different backgrounds, and we will discuss. It will be a little bit less technical type of meeting relatively to what we have here. We will not go deep in mathematics or discoveries like the show is about, but we will use our knowledge to discuss the market or maybe interesting news, events around Bitcoin. So stay tuned for that. And the show, like always, will be both on X, on YouTube, and so on, and all our channel too. Stephen channel, Pio's channel. And by the way, we usually have a chat going and we take questions. I noticed Restream, because we use this app called Restream, add an alert and say something is wrong right now with X chat. So if you are on X, I think you are able to see the show, but you will not be able to ask questions. So if you want to ask question, go to the YouTube channel, to our YouTube channel, both the Scientific Bitcoin channel and my personal channel, or even Stephen channel, and you can ask questions from there, okay? And like always, we answer all the questions at the end of the show. We don't answer them as they come. All right, let's go ahead with the Stephen agenda.
Okay. How's that look?
Yeah, and there is one question I do want to answer, because it's a kind of organizational question. Yeah, usually this show, so Luke T3368 is asking if this is the usual show live that we do on Wednesday. Yes, we change the time for today. Sorry for that. And thank you to watch us today. Okay.
Okay, so
let's go.
Yeah, so next week, this show's scheduled for Wednesday, and the new show, which will be more of a discussion about various topics, will be on Thursday, same time slot. All right, the title for number 53 is 2-year, 2-mode log periodic scenario. And I'm not going to bury the lead. It shows things being flattish well into the first part of next year. I'll show you the prior work that's kind of foundational for this work. And there are two key things in that. One is that by adding log periodic, we're able to outperform the pure power law, including without a sample testing. And when we do some windowing, not around the frequencies, but around the amplitudes and the phases for the log periodic modes, then our model improves. So, we feel like the amplitudes and phases are drifting over time. And so it seems to be useful, shall we say, and we obviously don't have that many cycles, but it seems to be useful to have an intermediate scale window of a few years. We're talking 5, 6 kind of years, and to optimize the amplitude and phase in that window. And when we do, we get very high matching. And then that gives us a little more confidence in trying to walk forward with a forecast. And what it looks like is, with 2 log periodic modes, a fundamental and a higher frequency mode, which is not a pure harmonic, but a higher frequency, that the bottom is going to occur for log periodicity. This is after you subtract out the power law, that it's going to occur early 2027. So we've got this power law that's chugging along and on trend is giving us about 3% a month. This is the signal around that. And the graphs, the charts will make that more clear. And it also says, though, that we're not going to recover 100K until around the end of 2027. And I don't want to try to project too far in the future, but with 5-year training, I projected out 24 months, and we will continue to update this, as more data comes in. The next fundamental peak looks like it would not occur until mid-2033. The second mode in early 2030. So we've got good runway ahead of us through the rest of the decade, because now these are both going to be upturning, at least after we get past the early part of 2027. The fundamental is already turned up. Okay, so here's the prior work. And the first chart, there's an article on Substack that I wrote called Bitcoin's Not So Hidden Structure. And what this chart is showing is the error in a walk forward test, only using data, in the past at any given time. And then this is an average of many runs, and then with different forecast horizons. So it's a plot of the error in log price terms, the RMSE it's called, log 10 price terms, as a function of the forecast horizon, which here runs from a quarter of a year out to 4 years. And there's a 3 sigmoid which goes off into space, doesn't work at all. It works, it looks like it works in the past, but then when you try to walk it forward, it doesn't work at all. But the power law does. And in fact, the power law has smaller error as time goes on. It drops from close to 0.3 at a quarter year in the log. 0.3 is a factor 2, until it's down around 0.27. It's the blue line there. But in fact, you can improve on it if you add log periodicity. And the green line has 1 log periodic mode, and the red line has 2 log periodic modes. And you can see that they're both below the power law in the interval from 3 months to about 2.5 years. So we're interested in that intermediate time. And that's why I've made this forecast 24 months going forward, including 2 log periodic modes. And this sort of capability has been confirmed by Carlos Boquera at the University of Porto. And then the second article is when I first started to use these intermediate windows instead of just the global fits for amplitude. In the past, what I've done is determine the frequency, and we're going to keep global frequencies in everything we talk about today. But the amplitudes and phases are calibrated within a local window. A 5-year training window is what's shown in this chart. And I wrote about this in an article, Forecasting Bitcoin Beyond the Power Law, using log periodicity and financial stress. So this particular chart also includes the financial conditions index. And that's why the orange line has this kind of jaggy behavior, because it includes that. But the green dots are only 2 log periodic modes. And you can see that they fit pretty well what happened from mid-2021 until now. And particular, the fall, the recovery at the end of 2022. Now this again is in the residual. So we've subtracted out the power law. But the recovery since 2023 leading up into 2025, and then the decline that hit us in 2025, which did not peak until the first week of October, but the log periodicity was already starting to decay. So what you had was power law carrying it up, the log periodicity, look at the green dotted line, and the orange line to some extent. It also has the financial conditions. That's flattening out even in the early part of 2025. And then its decline is steepening. And you can see it hits pretty well with the sharp decline that we experience from October through the end of the year and into 2026. And in fact, it has, as you can see, continued decline in the log periodicity up until the present and a little bit projecting into the future. But that projection was really just done for the financial conditions part. But you can see what happens also with the dotted line. Now, the point here is that it's the second mode. It's not the fundamental mode that's causing this. And you'll see that in a moment. Okay, first of all, the fit to the frequencies. So this is all the data. This is a global fit for the fundamental frequency in the upper chart with the blue line, you can see it flattens, the power increases and then goes down. This is like an FFT, but it's adapted to logarithmic timing. And the peak's right at an omega of 8.57. And that corresponds to a lambda, which is the log periodic spacing parameter of 2.08. Every time we run this on different data sets, even with different denominators like gold, we get a value of lambda that's over 2 and less than 2.1. And so this is consistent with previous tests. It's a somewhat broad peak, but it's clearly around 8.5. And then the second mode is shown below with that green line, and that's pretty prominent. And that's at 23.6 frequency. The ratio of that is 2.75. So that's 2.75 times the fundamental is the second largest mode. And it's not an even harmonic. That would be at around 17. And you can see there's actually a minimum in this chart there. So those are the two frequencies that we use, and those are global. We don't change those as we run through the model. And the total equation that gets fit, if you put into log price terms, and I've got actually in this equation, it's a little bit messy. There's two kinds of logs in here. There's a log 10, log, and there's a natural log, ln. But you can write it all in natural logs. You could even write it all in log 10, but it's a little more convenient to do like this. So the first two terms of the power law term, just a level, plus beta, which is the power law index, times the log of time. And then there are two modes, A1, A2 are the amplitudes. The frequencies, omega 1 and omega 2, are the frequencies I just showed you that are determined globally, and they multiply logarithmic age, the log t, and then there's a phase, phi1 and phi2, appropriate to each of those terms. So the amplitudes, the A's, and the phases, the phis, are things that we adjust in our windows, and we tested 3-year through 8-year windows. And these parameters are for a 5-year window. And what we found is with the power law, you get, I actually use QR because it doesn't overweight the big excursions as much. So it's the quantile regression median. The R squared is 0.96. When you add the two modes globally, the R squared increases to 0.98. So you're explaining about half of the residuals. In other words, there's 4% that's left over as residuals, and half of those, 2% of that, residuals from the power law are explained. And for the global, the higher mode has a lower amplitude, 62%, but still significant of the fundamental. And you can see all the other parameters here. And so there's a 5-year training window. This is a quantile regression, one power law fit, and two log periodic modes are shown only at the very tail, where we do a 24-month projection with the red dots and the red line. And it shows some continued decline, and I'll show you this in much more detail, but it shows some continued decline and then turn up and then head back towards trying to reach the power law, but not quite reaching it at 24 months out. Okay, so this is our fit with the 5-year training window and then 2 years of forecasts. So the blue line is 2 log periodic modes fitting the data, the residuals, and you can see the fit's very good. It's a 0.87 R squared. So we gain a lot with this. The RMSE is 0.07 dex, and that translates to 15 to 17%. So that's pretty small compared to the overall volatility, which tends to be up in the 40 percentile. And the fundamental is the green dots. So you can see the fundamental is slow, and that it bottomed right around the end of 2025, the beginning of 2026, and it's slowly turning up. The orange dotted line is the second mode. And actually for this fit, the second mode has a higher amplitude than the fundamental. So it's not terribly higher, but it's, somewhat higher. And so it ends up dominating, and it explains most of the structure in 2022, 2023, 2024, 2025 decline, and into this part of 2026. Really, most of what's in that 5-year window is dominated by the second mode. There's a small intercept, small offset, but it's not significant. The combined bottom of both, so if you add the two modes together, the residuals basically the movement away from the power law will bottom in April 2027. So what we have is it's still declining. The power law, of course, is still moving up about 3% a month. The two are offsetting each other. And actually, under this forecast, it's quite flattish in the residuals, but the price does not drop below 60,000 again, at least in the median forecast with this, because the two are canceling each other out. So we just kind of chug along where we are for the next number of months. Now, this is a different window. It's an 8-year training window, but you can see it gave qualitatively a pretty similar result. But you're able to see a longer history for the fundamental. And you note that for the 2021 bubble, that with the phase shift that we get here, some of that's explained by the fundamental, but it was already in decline, and you need the second mode, the orange dots, to explain that. And then you get a good combination of the two modes. And then the downdraft into 2023, 24, and then the updraft, back in late 24, and into 25, and peaking again. So qualitatively quite similar. The R-squared is lower, 0.65, a little harder to fit a longer interval, of course. But the RMSE is not that bad at 24 to 32% at 0.12 DEX. And the amplitudes are comparable. The phases are within 6 degrees between the 8-year training window and the 5-year training window. The phases don't change that much. And again, the combined bottom for the residuals is in April of next year. And this shows just the training window portion, comparing 5 years, 6 years, and 8 years. And 6 years does have a deeper dip. 5 and 8 years look pretty similar qualitatively. I did 3 years and 4 years. The 3-year was just pathological. It's too short a window to get a good fit because, some number of years long, right? So it just couldn't fit it that well. And then you can see where the 100,000 line level is. It's marked 10 to the 5th here, and it's right in the middle of the chart. And you cross it for the 5-year and the 6-year, you cross it very late in 2027, in the last quarter of 2027. And for the 6-year, for the 6-year window, it's significantly later. But we're more inclined to believe, the red curve and the blue curve, since they're similar. And so, they start turning up fairly strongly as you get into the middle of 2027, and then they head up towards the power law. Now, this mixes in global amplitudes with the locally determined amplitudes. So it's kind of a way of sensitivity testing, something that's relying fully on the local amplitudes. So these 3 dotted line curves mix in different amounts of the global amplitude. So the green curve is 2/3 local and 1/3 global, and the purple dots are 2/3 global and 1/3 local. So you can get some idea of the sensitivity to all this. And, they're not drastically different, but if you're inclined to believe the global amplitudes and think, gosh, maybe we're overfitting here, then you would move the 100K crossing in by a few months, 2 to 4 months. I did out of sample testing, and it's a little hard to do because you have to have enough look back and then enough forecast forward. And I wanted to do it in logarithmic fashion, so to be equal geometry, right? So I made it half the age look back and a quarter age forecast. So you'll see noted that the forecast horizon changes at different ages. But it turned out to be a mixed bag that couldn't really outperform the power law on average for out of sample. However, since age 10, you do tend to outperform out of sample. The blue bars in that right-hand portion of the chart, in the shaded area, age 10, 11, 12, 13, 14, and that we couldn't go past age 14 and have enough distance out of sample. The blue bars are lower on average than the power law bars. So given, the uncertainty with the out of sample testing, we say that this is a scenario, not a forecast. So here are the numbers for the 5-year training, the base case. In 12 months, you'd be at 73K. So it's pretty flat scenario. In February, you'd be at 60,000. The forecast is anchored to our present value and then has the 2 modes involved. And then we add back in where the power law will be. So the power law baseline 6 months from now would be at 155,000. So we could still be significantly below it, 0.4 dex. But then we start rising. So by the time you get to 24 months, it's 0.08 dex. So it's not that much. So it's catching up over time, but it's gradual. So 24 months out, the global power law baseline is about 250,000. But with these 2 modes, we're at about 204,000. And in terms of when the peaks will be, with the fundamental mode, the prior peak was in November of 2020, and the next peak is in August of 2033. And I'm using the 5-year local amplitudes and phases for that, but the global frequencies held fixed. The higher mode, the prior peak was in February of 2025, and it's been the downdraft in that that's, been our problem here, at least much of it. And then the next peak is not until January 2030. So, we've got rising fortunes once it turns, which is early 2027. We've got rising fortunes for, a 3-year horizon ahead of that. And the combined 2-mode curve had its prior peak at the beginning of 2025, and its next peak dominated really by the higher mode, which now has, for this window, higher amplitude, is close. It's a little further out in 2030, April 2030. So why log periodicity? Well, it's another aspect of scale invariance. We've got continuous scale invariance in the power law, and that's the blue line here, that's beta. So if we only look backwards in time, that's what we would measure for the power law. And you can see after about age 6 or 7, it locked in, and it's always been, a little bit below 6, basically. And then the lambda parameter is the green line, and it's always been close to 2. And omega is the red line. It's just the angular frequency, which is directly corresponds through a relationship with lambda, the log periodicity. You have to take its inverse and then take the exponential of that to get lambda. And then we have found that there's this coupling constant relationship that we hypothesized, which is really a product of the 2 of the power law exponent, but times the log of lambda. And on this chart, it's that orange line in the middle. And again, it goes through this process and kind of locks in after age 6, and it's been pretty much around 4 ever since. So the analogy or picture is that we've got these external influences from macro and regulation, anything that's external, exogenous, but we've got a strong endogenous network, and it's got some resonant nature, like a bell. And these influences are striking it, and sometimes they're in phase and additive, and sometimes they're out of phase and destructive. So the log periodicity may reflect the response of this monetary network, which has hierarchies and scale and fat nodes within it, to external forcing. So these macroeconomic shocks will excite it, but the endogenous hierarchy that's internal to the network structure reflects adoption cohorts, the fact that you've got exchanges and hedge funds and ETFs and different scales of capital and different connectivity, much more connectivity to the fatter nodes, more market depth, and that may generate this kind of behavior. This is discrete scale invariance that can arise when you have continuous scale invariance that gets impacted by an external system. So that's the view. So Bitcoin's residuals, after subtracting the power law, contain meaningful structure, log periodicity. And this is a summary from a Substack article I put up just 4 days ago. So if we hold these globally identified frequencies fixed, but we estimate the amplitudes and phases locally, where locally is a window like 5 years, it's a long local window, then we get this endogenous scenario of broadly flat prices over the next year, with recovery and a combined peak around 2030. And just a caution about sensitivity to calibration windows and the fact that these amplitudes can drift and these phases can drift over time. And so we're going to keep updating this thing. But it provides an interesting conditional view of where we're going. And with that, I remind people of our suggested reading, Giovanni's book, if you haven't read it, available in a nice, thick, highly color version as a soft cover, or available as an ebook if you can't afford the shipping charge. And then our paper, which you can download at Zenodo, and it has over 13,000 downloads. And you can find the links to both of these at the scientificbitcoininstitute.org/research. Okay.
Fantastic. Very nice. Can we assign probabilities to these scenarios, as you call them?
It's a little hard. I think I'm encouraged by the similarity between the 5-year and the 8-year weighting windows.
Mm-hmm.
The 5-year and 8-year windows have quite similar forecasts. The out of sample testing is inconclusive. And it's not unusual that log periodicity, when you do it for single bubbles, and in effect, this is kind of doing it for a single bubble in a trough, right? Because this is dominated by the last weak bubble that we had in the trough that we've gone into. And it's typical that when you do that you see a lot of motion, and you have to keep rechecking and updating and seeing how that develops.
Very good. So this is kind of a preview of some of the work we are doing. As you see, this is what I call the dynamical regimes. It's just one of the many indicators that we have. This is the very sophisticated one that I was telling you, that is using an assemble of experts that is basically voting on what are these different regimes, and it combines both dynamics and distance from the power law. And you can choose different windows. I'm trying to make it as interactive as possible, so you can choose different windows where the data is analyzed. You can choose weeks, months, years. There are different way of visualizing the data. For example, this is showing the single dots, but you can have also bands to indicate the different regions. You can choose, like always, the linear, log linear, or log views. You can, for example, you can try to optimize different things like Sharpie, Sortino, getting the majority of Bitcoins that you can, or minimizing the drawdowns. And like always, we have pages where we look at the accuracy. So basically, there is all kind of data that are telling you how good these calculations are, what is the range of applications, the methodology as explained in all kind of details, even references. Because differently from other tools like these that maybe they are on the market, we want to be an observatory, scientific observatory. That is the entire approach of the institute. We want to show that you actually can do science in studying in general financial data, but our case, is Bitcoin itself. Eventually, I will have also pages where we analyze oil, gold, but always as kind of as a function of Bitcoin, right? That is our approach, because I think more than any other financial asset, Bitcoin is something that has so many regularities, also because we are claiming it's a network, and so it behaves in a different way. So these are scientific approaches, probably going to work with a lot of other data, financial data. But first of all, we are an institute dedicated in understanding Bitcoin. Of course, it will be interesting to show this comparison with other assets and some of the future indicators. We actually do that. I'm going through every single indicator to improve it and make it better. So this one, for example, we have gold versus Bitcoin. We will add more information, like maybe color bands. This one doesn't have yet colors and other aesthetical things that can improve an indicator. But you can see, for example, we have a Bitcoin versus gold. You can have it linear. You can have log linear, and you can even reverse, because it's actually interesting. You can have BTC versus gold. Of course, in this case, the power law grows, or the other way around. That is kind of almost a joke, in the sense that everything goes down, but it's also kind of cool to see it in this way, right? So you can, at the click of a button, you can revert it. In this case, it shows how much Bitcoin you need to buy an ounce of gold, right? And that quantity is becoming smaller with time. And like always, we have sections where we discuss the science, the historical accuracy, methodology. Every page has a calculator where you can do calculations, projector. Here, I don't have yet projections. I'm going to add them. It will be another button where you say, show me the projection at 2 months, 5 months, 10 months, whatever. But the entire idea is that it's going to be kind of the ultimate place where you can find anything power law related, but also beyond the power law. Very big classical indicators. Down here, like I say, there are 75 of them. Even comparison with other models, even if they are useless one, like stock to flow, just to show you how ridiculous these models are. So I'm working and going right now, indicator by indicator, trying to make it better in terms of how it looks, the functionality. There'll be a lot of buttons where people can click and explore and learn many different things. Eventually, every video will have a link here which says, watch the video. The video will explain you how to use the indicator, and the significance of it, and so on. So you better be, it's an opportunity also to learn things. In fact, if you go to the website, we even have what we call the academy, that is basically a bunch of classes. So as you became a member, because of we get sponsorships from companies and different institutions who work in the Bitcoin world, but we want also to have a direct contact with the Bitcoin community. And so we want people to participate, to be proud members of the organization. Maybe you can get a nice hat like this and go around, and it could be a way also to introduce people to Bitcoin, because you said, there is an entire science and scientists that study Bitcoin and show it has a regular pattern. So they publish papers. Some people could be orange pill just by that, right? And so we want the community to be involved, and so you will have some perks by becoming a member, like having access to this dashboard and also the classes. So we are preparing a bunch of classes, from very basic classes that hopefully give us also feedback on the classes, because we want to make them kind of almost a standard, so people can say, oh, go to the Scientific Bitcoin Institute. This is what I'm actually doing. I go to the gym and people ask me what I'm doing, and they say, learn about Bitcoin, and they send them to the academy, where there is this introductory class on Bitcoin, money in general, inflation, things that many people don't know. And we are trying to do it in many different languages. Right now we have only English and Italian, but eventually, and if you want to get involved, because we can do with the AI, but we always need somebody that speaks the language to double check the translation is correct. Let me know, and maybe we can do it together, translating these videos in different languages. And there are more advanced classes where we talk about the power law, where you can learn about power laws in nature, the different tools that we use here, actually even how to use AI to analyze the data, download the data, do your own chart. So it will be another very important contribution to the community, having all these classes that you can take at different depth, right? We are thinking to go from elementary classes all the way to almost university level classes on all these topics that are relevant. And again, there will be three different layers, three different tiers of involvement for the public. And the highest tiers give you access to all the classes, all the indicators, even these very sophisticated indicators that are developing. Okay, guys, let's look at some of your questions. We have a few. Okay. Yeah. Hi. Thank you, Dave. And then do you want to answer this question, Stephen?
Those things are just too short term to matter. They're really, we didn't even see, what's interesting is how little the price moved on the cold card vulnerability. And so that was showing, some robustness on the part of Bitcoin. And you could say the same thing about BIP 110. No, power law index doesn't change.
Yeah. So, this is one of the strongest things about what we are doing. That basically we are showing how resilient Bitcoin is. And yes, in the past there have been events like at the level, let's say, of COVID, that creates a temporary sharp correction. The interesting thing is that usually the correction arrives to the floor. Remember when we discussed the floor, in fact, will be one of the indicators. There is not a floor, there is like a band, right? A band of where Bitcoin reaches and then doesn't spend a lot of time in that region. And by the way, the main indicator that has all that information is free for everybody, okay? So because right now we don't even have this membership level. And so this indicator that we call the corridor is free for everybody. And it tells you, I notice it doesn't tell you the reference price. I need to change that, I need to add it, but it tells you where we are in terms of deviations. And it shows here the historical deviations of the floor, what we had, right? So we had times where we were even 1.14, 1.29, 1.38 in the past. Right now, we are only 1.1 sigma, okay? So the floor is not really anything structurally. It's not like an impenetrable floor, right? It's more like a region, but it's the closest thing to a floor because you can see when it reaches this region, we don't spend a lot of time below it, right? And this, for example, that was COVID. You see that peak there are kind of negative peak. The price reached that region, like minus 0.87 sigmas, and then bounce back. So yeah, you can see deviations like that temporarily, but we have to be at the level of COVID, right? And even if it was very painful, what happened with cold card was not at the COVID level where the entire economy, of the world was impacted, right? So it doesn't change. Also because once we are on that negative floor, it's very, very difficult to go even lower, something disastrous. And it's almost a confirmation that there is something particular here, If you go to the residual, this is, you see how beautiful these charts are? These are the residuals, right? So we take out the power law floor, then you can see, right, to answer your questions, see how beautiful this is. I think it's just amazing. You can zoom in, you can see where we are in relatively to the deviations, right? This was a kind of a local minima that we had. And notice how we are moving flat, right? So basically, by the way, many people think we are flat, but we are not, because if the residuals are flat, it means we are following the power law. And it's so interesting because see how this is typical, when we reach this floor, we reach the floor and then we don't stay flat. It looks flat because the growth along the power law is slow, but we are not, because we are still growing. We are still up, going exactly like the power law says we should, right? So this happened many times. We change basically the region where we are, but then we continue to move along the power law. We go down almost like stairs, right? We move along the power law. We go down other stairs. We move along the power law. And then we do the opposite, right? When we go up, sometimes we do it very, very fast, and then we correct, but we always along the power law. But yeah, no, you can see there is nothing dramatic happening there. It's very similar to everything else. Yeah. If there is like a dip, it's a very small little dip. But in general, we are following the power law right now. Okay. Hello to you, Tommy. Yeah, we are all here for learning. That is one of the beautiful things about Bitcoin. It's all about learning. Yeah. This show is different from many other shows. We are trying to go a little bit deeper. We present a lot of information. I'm kind of taking a break from researching Bitcoin, even if that work that I show you, the samples of many decision maker using Eden Markov chain is a kind of research, right? but I'm very focused on creating this dashboard that I think is start to look like amazing. And Stephen is continuing to push research into Bitcoin. That is one of the goals of the Institute, to continue to research Bitcoin, understanding more and more things in it. We are writing different reports. Yesterday we had a meeting with a group that is associated with the Italian Parliament, because we want to write recommendations for the government and every group. We have almost 70 people in this organization, this committee, parliament committee, with different expertise. Some of them are professors and so on. And the Institute has one of the branches of this organization with, with this. We are going in sometime in September, we are going to make a presentation in front of the politicians, and the Institute will be involved. What we decided to do is this report about how people can use Bitcoin to warm their houses, integrate with the grid, the electrical grid, and provide stability to the grid. Not just companies, but even individuals can do that. And so we want to use the power law to make projections of electricity cost and in the future, and also the price of Bitcoin. So I make a report like this for the government. So a lot of what we do is research of this kind, and then we're trying to share it with the community. And I know it's intense sometimes because we talk a lot about a lot of technical things. But my suggestion is to watch the show a few times, so you can go through the details. And then Stephen is very methodic in writing these articles where he breaks down all the information. So a lot of the things that he talks is also on his Substack. And I try to do the same. Eventually, we will also organize all this information on the Scientific Bitcoin Institute website. There will be material, there will be pages where you can go and get documents or articles, and so you can take these and put it through ChatGPT or Claude and ask for a summary, ask to explain it step by step. So if you really want to learn, these shows are invaluable, and you can find. I know a lot of people watch them through X, but you can find all their episodes on our website. There is a Scientific Bitcoin Institute website. Okay. Thank you for sharing your thinking, findings, especially log periodicity, suggesting we know again under K until 27. I need to hear this to mentally prepare for even longer consolidation. Yeah. Stephen can comment on this, but what I want to say, that actually points to one of the things that is very important in what we are doing. We are trying to be as conservative as possible, right? We are trying to say, well, look, the data, the science suggests this, right? And this is why in the dashboard I have a methodology page, because many times in science, it's not so important the result. The result is important, but even more is to tell you how we did it. Because one, the results need to be reproducible. So anybody that wants to do it, and nowadays with AI, anybody can reproduce this result, right? Any intelligent person, even if you don't have all the knowledge of the details, you can use ChatGPT, Claude, and it can guide you through all the logical steps. Maybe you don't understand every single detail, but you can reproduce the results. And also, okay, we maybe didn't get the right result because you cannot include everything in your model, right? A model by design needs to be something simpler than reality, right? Hopefully simple enough to be understandable, but also it has enough information to reproduce what is going to happen, right? But reality is much more complex, right? Nobody could have predicted COVID. Some people even predicted COVID, but not exactly when it will happen. They say there will be some event similar to COVID. But if I tell you how I did it and I explain the methodology, you know at least which kind of expectations, right? Under which conditions something is going to happen. But yeah, in general, we are trying to, we don't have an agenda. We are trying to understand ourselves what is going on. And we are trying to be as conservative as possible, you know. Okay, do you want to say something about that, Stephen?
Just that, you know, with the power law and with log periodicity, everything stretches out and happens on a log time scale. So we all need to get a little comfortable with the idea that, you know, the action is not going to look like it did historically. The time you can, from the current power law index, there's this nice rule of thumb. In fact, Pius tweeted it again today. You take the current age, you add 50%, and that's how long it takes to get a 10-time multiple. So obviously that 50%, you know, is out right now about 9 years. Whereas if you go back to half the age, you know, is 4.5 years out. So we all have to get comfortable with that. But it's also the case that volatility is coming down. So the Sharpe ratio that Giovanni mentioned earlier is actually going to asymptote, at least with some models of how that volatility is coming down. And the continuous version of the Kelly formula actually gets better with time, because that has a sigma squared. It has a deviation squared in the denominator. So the patience can be rewarded if you look at it from that viewpoint.
Yeah. I should add, that reminds me, I should add a Kelly as a measure, as an indicator, a continuous Kelly. Maybe you can help me to create it. Okay. And you guys, if you have other indicators, other things that you want us to add, you know, it's going to be a community project. So tell us what you think we should have in this battery of tools. Okay.
Yeah, let me comment on that. This is going to be a little bit of a long answer, because the first thing to understand is that the LPPLS is not the same as the PL plus LP. Mm-hmm. So LPPLS is a model for a single bubble leading up to a crash, and time is running in the opposite direction. In other words, you measure the time up until the crash, and the zero time is at the crash. So it's running time backwards in a sense in that model. It's also got more parameters. It's a 7-parameter model. This model is a long-term model, and Sornet has applied this in the past. He has applied it even to Bitcoin, where you're trying to look over the whole history and model what's happening with the bubbles across the whole history. And there, time goes forward from time 0. Okay. So given that, and I'm not aware of his newsletter, but yeah, it makes sense what he's saying. That
yeah, well, actually, I'm curious
with his
about
LPPLS,
that
there was no clear bubble, right, in 2025. We did not move much above the power law trend. Why do I think that is? I think that is because the bubbles happen with log periodicity, and as far as I know, he has not modeled harmonics. So yes, we had fundamental work very well from 2012 to 2018 because the bubbles were in 2011, 2013, 2017. 2021 was not a fundamental bubble. It was dominated by a harmonic, or this second, you know, higher frequency mode. And the same is true for 2025. And I don't think Sornet has put that into his modeling, and he has not been modeling the whole structure forward. He's primarily been modeling individual bubbles that appeared along the way.
So I'm looking up. I'm actually giving. I'm going to put this on the chat. There is this thing is called Financial Crisis Observatory, and I don't know if it is linked directly to Sornet. It says it's based.
Did you hear the end of that
work.
answer, or?
Huh? You're right.
Yeah,
I
was answering, but maybe you didn't hear me.
No, I heard you. I say I'm
but I don't know if other people heard.
I could hear you, so I think everybody heard you. You're worried about people hearing you? Are you asking? Stephen?
You froze, but I don't know if it, yes, you froze for a while, but I don't know if it was at my end or your end.
Okay. But I can hear you fine now. Basically, I found a link to what Campi was mentioning. Is an organization called, or a website called Financial Crisis Observatory. Seems very well done. We have basically we are looking at bubbles in different financial instruments, I think, not just Bitcoin. I want to research it better, but I just posted a link in the chat. Okay. People say that they heard your whole answer. Yeah. Okay. Yeah, and by the way, I'm trying to recreate something similar to that, where it's one of the indicators where, again, with all the limitations, etc., to see if we can identify local minima, local maxima, using this Sornet approach. But what I'm preparing will tell you, look, this looks like maybe there is a peak, but take it with a grain of salt, because it doesn't meet all the requirement to identify a strong bubble or a strong minima, right? I'm building myself an observatory like that, and it will be part of the tools we are going to use. We will have a real-time LLP. It's not trivial to do something like that, but I will try to add it. Okay. Then we have this.
We use the historical data at the forecast checkpoint, and I showed the chart of how those evolve over time.
And I skipped this one. What are the next steps for continual LP research? PL and LP coupling, other?
I don't know. It's like week to week what I get curious about and where I think I can make progress. The coupling is really interesting. I don't know exactly how we make progress beyond noting that this coupling constant, that's the product of these two, is really the ratio of beta over omega multiplied by 2 pi. But how that comes about, it's like a renormalizable group theoretical product. But how we prove that it's real, I don't know yet. Maybe Giovanni has some ideas.
Yeah. We will continue to work in that direction. The beauty with Bitcoin is that when you think, I used everything, I studied everything, I dug anything, I found all the possible patterns. You always find something else. you can go deeper. I have been worried in the past, like, oh, maybe we run out of topics to research. There is always something interesting to go deeper. So, but yes, I'm glad that you guys find this interesting, and this is why we will continue. Is what episode number 55? I forgot. Steven, which number is this? And by the way, I forgot to change the title. I think it's
53. 53.
In fact, I need to
Or is
change
it
the
55?
title. Let me
53.
change it on the fly. 53. This is why probably people were confused. 13. Okay. Yeah, let me check. I'll just change it. Yeah, we will continue to have many shows. Anyway, let's see. And then there is a follow-up question.
Yeah, well, good question. No, I listened to a podcast with Michael Howell the other day, and he talked about his observed R squared for liquidity. And he was very proud that his R squared was 0.3 because, in typical financial series, that's a pretty decent number. I just showed you an R squared of 0.86. I have done some tests with liquidity. Now I don't have access to his index, but I've tested with OECD M3 liquidity, and I find that it doesn't add much at all. It's weak. And actually, the financial conditions index, it adds more. It adds a few percent. And it's not surprising because the financial conditions index is a weekly index. It's very responsive. It comes out every week. Liquidity is the lagging indicator.
Yeah.
And its lag is fairly long, like maybe 11, 13 weeks kind of long. So I don't put much stock in liquidity for global liquidity. Now that's different from liquidity on exchanges and so forth, which is not something that I've studied.
Yeah. And so eventually, one of the things the Institute wants to do, we're working towards that, is to have a node, a node here. Right now, the only thing we run is a small little solo miner that I actually won. There was a guy that came from Brain. It's one of the pools, and they sell also little devices. And we did a little competition among all the people in this hub, Bitcoin hub, and I won the device. And that's why we put it. I donated to the Institute, so it belongs to the Institute. It's $300 device, so hopefully we win a block because it's a solo miner. But aside, jokes aside, we do want to have a node. And then we want to learn how to extract information from the node. And so maybe when we get more detailed information from, I don't know, addresses or something more directly from the chain itself, we will find new information, even something about the log periodicity. I don't know. I think going to the raw data will be really fascinating if once we do that. Okay, but it's a very cool thesis, right? If we can show that is, I think, is the biggest challenge, and I think it will take time anyway, because the problem with the log periodicity is that we don't have a lot of oscillation. With the power law, we have literally thousands and thousands of data points. With the log periodicity, no, right? We have a few oscillations. Now, there is probably some way of maximizing that information. I need to think about it, right? Because it's also the type of oscillations that we are observing, right? Maybe there is a way you need many of these oscillations to happen. Maybe how well we are tracking the oscillation can be used to determine if the signal is real. But in the end, the bottom line is that, right, we don't have a lot of oscillations. And so as we get more data, we can confirm it or deny it, right? And if we confirm it, then it's going to be really, really cool, because you have this endogenous behavior that is the power law itself. And on top of that, even the oscillations are endogenous. So, it will be something unique that people need really to study. It should be in textbooks, right? And all of these all these psychological drama associated with, this, what people call the cycles, let's call these oscillations. In the end, it's simply Bitcoin evolving, and reacting to its own dynamics, internal dynamics. Of course, the beauty will be eventually to write also theoretical model, to come up with theoretical model. Why this happens, right? Why the power law happens in the first place? Like these are deeper questions, right? That in physics, this is what we do. We study something, we discover a phenomena, and then we try to explain it at the fundamental level, right? Really, the model that people talk in physics are more like this theoretical model, right? Basically, we want to explain and say, okay, given the interactions between people, different participants, different agents at different levels, and the coupling between them, do we recreate the power law, right, in a relatively natural way? That could be really interesting. And then internally to that, in addition to that, would be interesting to show that there are some log periodicity that come from the interactions, the fundamental interactions between the agents. So that will be a really, really cool work if we could do it. And I don't say it's Nobel Prize kind of work, but you could really write entire books using Bitcoin as a model for this very, very interesting behavior that involves economy, involves social media, that involves psychology. It's really cool. Social physics, econophysics, kind of laboratory, for very interesting behaviors. Okay. Such a great platform when it's ready to use and how to join. Yeah, right now I was saying everybody, so go to the Scientific Bitcoin. Let's see if I can show you around. So if you go to Scientific Bitcoin Institute, okay, let me show you. So in fact, I can do it here in another page. So let's do it. So you say scientificbitcoininstitute.org. This is how it looks like. Okay. And then you see there are many different things, research, publication. It's going to be like not just a website, but a place where you can go and find all kind of interesting information, even open problems that we want to study. You see, I put these log periodicity models as one of the things that we are exploring. And we have insights. We're going to have different articles. I'm going to actually update probably with Stephen work. So we have this publication called Insights. And then if you want to know what we are doing, we have a kind of an event journal. This is me traveling around. Stephen is going to join me in Hong Kong. So this is mostly to share with you all the different things we do, different places. But it's cool because if you go there, then there is like usually lectures that I gave. Here it was like in San Marino. It is like a nation state inside Italy, right? We have three nations in one. We have the Vatican City and then San Marino, that is a small little country inside Italy. And the Bank of San Marino wanted to create a a product for their users. It's one of these places that could be kind of a Bitcoin capital, because they have they are trying to attract investors. Being a small nation, we have a lot of autonomy, and so if you go there, you can listen to the talk I gave, we met. It's just a way of showing all the different things the Institute is doing to promote Bitcoin around the world, right? We went to Prague, and now we are going to Hong Kong soon. And then we have the Academy. Right now, we have a very basic, this is little Satoshi that comes out and says hello. There is both Italian and English. I don't know if it's Satoshi just comes up for the, no, it's here. Hey, Satoshi. And it's actually AI. Our AI is very primitive right now, but eventually it will improve. We will have our own AI. And you can ask Satoshi different things. So Satoshi is this little guy there. So we are really working. We are doing a lot of different things. And this is a very basic course about Bitcoin. And maybe you can tell people to go and learn about Bitcoin. Check it out. Tell me if what you think about it, because we can improve it. It's kind of almost like a Duolingo. You get points, experience, as you go through the course, and it's going to ask you questions so that you can answer to see if you understood. And then we are going to have a power law course. So this is you are going to access when we are going to have this support program. So basically, there will be 3 different levels. The first level is like $10. So it's a non-profit organization. The money that we use is to support also students, professors. We are going to have a conference in October, a scientific conference. All these things require money, like anything, right? And so you can support us with a small donation every month, $10, and I think it will go all the way from $10 to $100, say. And $100 give you access to everything, all the classes, all the courses, newsletter, and that platform with all the indicators, even that very professional indicators that I told you can actually multiply your Bitcoin. So we are going to have different classes about power laws and in nature, around us, mining, all different topics that you can imagine. It will be in the Academy. But right now, if you want to have access to that corridor chart, scroll down, all the way down. Here, by the way, there is a very, very nice video that tells you about the mission of the Institute. Maybe sometime we can watch it together. We have a manifesto that tell you what we think about, what is the mission of the Institute, okay? Research, collaboration, education, community, innovation, all these things. Read our manifesto, because I think it's very beautiful. Basically, it's a vision of Bitcoin as a system, then theory, dynamism. So basically, we are trying to say Bitcoin is much, much more than just an asset. It is a very fascinating system that people should study, that it should be in textbook, independently on if you want to invest or not, right? So when people dismiss it, say, oh, it's nothing, it's a scam, it's a pyramid scheme, they don't know what they're talking about. And we are trying to say, look, it's all these things. It's a very beautiful experiment that people are doing. The core mission is very noble. It's an idea of creating money that is not corrupted by the government, companies, and so on. So we are trying to make these our mission, to explain all these and show it, not just through cheerleading, that is a lot of what we are doing. Like even Sailor is doing that. We are showing the data. It behaves like a network. It's something that if it was a pyramid scheme, it would not have this complexity of behavior. So, but like I was telling you, if you go to the main page, to our main page, Okay, you scroll down and you can become a member. You say become a member. Okay, and if you go right now, it's all free, and then say become a reader for free. Okay, here, click, put your name, your email, right? And then you get a newsletter. So every 2 weeks, we send this new newsletter. Then you have access to the platform with the main indicator, that is the corridor one. Okay, it's free for everybody, and it will continue to be free. Then, if you want to get the other indicators, you donate $10 or more, and you can access all the other indicators. Okay, this is how you do it. So right now, please, everybody sign up for free. So we can be in touch with you. We can update you about all our activities. And when we launch the full platform and the academy, you can sign up. All right. Okay, guys, I think it was a very nice episode. We covered a lot of information. And we will be here next week. Thank you so much.
Thank you.